Top 3 artificial intelligence (AI) stocks to buy right now are not just ordinary investments. These are the companies positioned at the heart of innovation, disruption, and growth that can turn small investments into massive returns over the coming years. That's why today, we're diving into the top 3 artificial intelligence (AI) stocks to buy right now that have the potential to make you rich. These are not random picks, these are stocks backed with solid fundamentals, long-term vision, Wall Street support, and the kind of growth that can turn a small position into a game-changing outcome for investors. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. First on our list is Broadcom, trading under the ticker NASDAQ, AVGO. Broadcom is not a newcomer to the tech world, it's one of the most established semiconductor companies. But what makes it especially exciting right now is its growing presence in AI infrastructure. Broadcom's two biggest contributions to AI data centers are its connectivity switches and its custom AI accelerators. While connectivity switches are important, the real story here is its accelerators, which are custom-designed alternatives to NVIDIA's GPUs. Financially, Broadcom is firing on all cylinders. In fiscal Q2 2025, the company reported record total revenue of $15 billion, representing a robust 20% year-over-year increase. AI semiconductor revenue alone reached $4.4 billion, which was up an impressive 46% compared to the same quarter last year. Even more encouraging, Broadcom projects AI semiconductor revenue to grow by 60% year-over-year in Q3, setting up what will be the 10th consecutive quarter of growth in this key segment. This trajectory shows that Broadcom's AI business is not only sustainable, but accelerating at a pace that few companies can match. Meanwhile, its infrastructure software division also delivered, generating $6.6 billion in revenue, up 25% year-over-year, thanks to the successful integration of VMware and the popularity of VMware Cloud Foundation. Broadcom's gross margin stood at 79.4% in Q2, above guidance, largely due to a favorable product mix and operational discipline. With margins this strong, the company continues to prove it can scale profitably in a highly competitive space. At the time of the most recent update, Broadcom's stock price sat at $359.87, with analysts assigning it an average 12-month price target of $379.24. The high forecast among 29 analysts reached $419, while the low target was $300. The average price target reflects a modest 2.62% upside from the last price of $369.57. While the near-term projections may not scream explosive growth, the long-term story is far more compelling. If Broadcom continues to build momentum with its custom accelerators and strengthens its position as a critical player in AI data centers. The second stock on our list is ASML Holding, trading under NASDAQ, ASML. Unlike Broadcom, which builds semiconductors and accelerators, ASML occupies a truly unique position in the global semiconductor ecosystem. It is the sole supplier of extreme ultraviolet lithography, or EUV, machines. These machines are absolutely critical for manufacturing the most advanced chips in the world, including those used in AI applications, smartphones, and advanced computing. Looking at ASML's recent performance, the numbers demonstrate strength and resilience despite global market challenges. Total net sales came in at €7.7 billion at the upper end of guidance, with net system sales accounting for €5.6 billion. Of that, EUV sales were €2.7 billion, while non-EUV systems contributed €2.9 billion. Installed base management sales were €2.1 billion, exceeding expectations. Profitability was strong, with gross margin hitting 53.7%, again above guidance. The company reported €2.3 billion in net income, representing 29.8% of total net sales, and earnings per share of €5.90. Our /&D expenses reached €1.2 billion, underscoring the company's commitment to continuous innovation, while SG&A expenses were €299 million. ASML is also committed to returning value to shareholders. In Q2 2025, it paid a final dividend of €1.84 per share and declared a first quarterly interim dividend of €1.60 per share. On top of dividends, the company executed 1.4 billion euros in share buybacks during the quarter, bringing the total buybacks under its 2022 to 2025 program to 5.8 billion euros. Its backlog remains enormous at approximately 33 billion euros, giving investors visibility into future revenue streams. Looking ahead, ASML guided for full-year 2025 revenue growth of around 15%, with gross margins of about 52%. For Q3, revenue is expected to land between 7.4 billion euros and 7.9 billion euros, with gross margins of 50% to 52%. The stock is currently priced at $689.80, but Wall Street analysts see a much higher ceiling. Based on 9 analyst ratings over the past 3 months, the average 12-month price target is $865.75, with a high forecast of $1,000 and a low of $743. This implies a potential 9.15% upside from the last reported price of $793.14. For long-term investors, ASML's technological monopoly, massive backlog, and consistent profitability make it a compelling buy. It is the rare kind of company where demand is virtually guaranteed because no other player can replace it in the short or medium term. Last on our list is the Trade Desk, trading on the Nasdaq under TTD. Unlike Broadcom and ASML, which are directly involved in semiconductor and hardware technology, the Trade Desk is a software-driven digital advertising platform. Its role in AI is not about hardware, but about leveraging AI to deliver smarter, more efficient digital ad campaigns. Financial results show that the company is far from struggling despite the platform transition. In Q2 2025, the Trade Desk reported revenue of $694 million, up 19% year-over-year, with CEO Jeff Green highlighting that the company continues to outpace the broader digital ad market. Net income came in at $90 million, representing a 13% margin, with GAAP diluted earnings per share of 18 cents. Adjusted EBITDA stood at $271 million, producing an EBITDA margin of 39%. On a non-GAAP basis, net income was $203 million, with non-GAAP diluted earnings per share of 40 cents. These results underscore the fact that while growth may be slower than before, the company remains highly profitable and well-positioned to benefit once Kokai stabilizes. The Trade Desk stock is currently priced at $45.15, and Wall Street analysts see substantial upside. Based on 27 analyst ratings in the past 3 months, the average price target is $72.91, with a high of $100 and a low of $45. The average target represents an impressive 58.02% upside from the last reported price of $46.14. That means analysts expect significant recovery if the company can execute on its AI-first vision. The Trade Desk is well-positioned to ride the long-term trend of digital advertising growth, and with Kokai's AI-driven capabilities, it has the chance to differentiate itself from competitors and capture significant market share. Well, that concludes our list of the top 3 artificial intelligence AI stocks to buy right now. Broadcom is capitalizing on the explosive growth in AI hardware with its custom accelerators and strong infrastructure software business. ASML stands as the irreplaceable supplier of EUV machines, making it the backbone of the global semiconductor supply chain. The Trade Desk, despite short-term setbacks, has enormous long-term potential in the digital advertising market as it integrates its AI-first Kokai platform. Each of these stocks has the potential to deliver massive gains, and together they highlight the different ways AI is reshaping industries across the board. If you're serious about making money in the stock market, keeping an eye on these companies could be the key to building long-term wealth.